Hello traders, it's Ile here and welcome to the Trading Fanatic channel. Today we're gonna be discussing a technical aspect of trading, a very largely requested topic, which is entries and especially entries on the lower time frame. So I will be uploading kind of technical videos regarding the technical side of trading on Tuesday, and possibly on Thursday there will be something more psychological or something regarding discipline, trading plan, psychology and this kind of thing. So we may be able to come with a name as well for those two videos, so make sure to comment down below how you would like to see them. And this series largely depends on you guys, as the community is growing right now, and I would really appreciate your questions, because your questions give me topics to discuss, and that's how we can have week after week more and more educational content which is beneficial for you. So if you're new to the channel, make sure to hit the subscribe button, hit the notification bells in order not to miss the videos, and make sure to mention a topic you want me to discuss. As for now, let's see what do we have for today. Alright, so before we start, I just want to mention something to you guys. Entries don't matter. And you're like puzzling now, but yeah, indeed, entries don't matter. So I'm gonna be showing you right now why all of the traders try to get those sniper entries in order to look good or something like this. Well, no, basically your entry point will determine your stop loss and your take profit and overall your risk to reward ratio. If you don't know what risk to reward ratio is, make sure I have a video on this. It's called the Holy Grail of Trading, I believe. Go check it out. So just giving you a quick example. Imagine you enter here at this wick and you have a stop loss, a very tight stop loss of 10 pips. So you see your TP could be here, and this is 6R. It could be down here, and this is 12R. And this is not too realistic. However, if you enter after the price has developed and pushed to the downside, and then you have a stop loss of 27 pips, and this 6R here becomes 1.68. Do you see now why entries matter? And this 16R here becomes 3R. And this is the only reason that you should be kind of having a more tight entry system if you're not a swing trader and you're not comfortable with price pushing, for example, for days. That is why I use the lower time frames, and I'm gonna be showing you, just giving you a few examples, because I explain it in my course, and my students know how to do it. So let's see what I do. So let's take a recent example here. I am on Euro USD right now, 4-hourly chart. So we are overall in a downtrend. Price comes in here and starts to reject. So before price was here, we're looking at this market right like this, right? So this is a potential correction of this impulsive move, lower high potential. So we mark our levels, something like this, and we wait for the price to show us what's it about to do. So first of all, we need those confluences. I have a video on how to analyze the market as well with confluences and everything in fibs, but just here it's very simple. We just look at structure. So what is structure doing, guys? It pushed up, it started to consolidate, tried to continue up, failed, tried to continue down, failed. Hourly time frame, consolidation. What do? We wait. One more candle. What did price action try to do here, guys? And it's important that you try to shift your psychology and to dive behind the candles. What is this candle representing? It's not just a pin bar. It's telling a lot of information. Price from here attempted to push here. This candle was looking super bullish by the time it opened. A lot of people were jumping into longs when they see a big green candle, and that is why you don't need colors as well. And guess how many people were stopped out here? So when we get that candle, okay, let's see hourly time frame. Well, we see the fake out here. Price faked out, massive rejection, boom, bearish engulf. So after this information, then you can start looking for entries, guys, and it doesn't matter. You can enter like this after the bearish engulf, but your stop loss will be 24 pips. How I would approach this market is I would go to the 15 minutes. I'm seeing this push. and I will wait for a little pullback. Here it is, exactly retesting back at the line. 15-minute indecision long leg doji. Let's see, I can enter, you see, with 5 pips if I'm sure with this. But if I enter like this, my stop loss becomes 17 pips rather than, what was it, 20 something. So personally, I would enter like this just because I trust my analysis, and I will put a 6 pip stop loss. And you can see, oops, my TP, right now I will compare both trades. We were on the hourly, yeah. So if you entered after the bearish engulf, right here, you will have, let's say, 24 pip stop loss, because that is how you have to position your stop loss. You have to position it with structure. While here on the 15-minute, I already had structure. This was a lower high forming on the 15-minute, and the market and my understanding of price action permits me to have such tight stop losses. And you can see the difference now. That if you target, let's say 1 to 2, I would have hit TP already in just, I don't know, in just an hour or something, some minutes. While here, 2R, you have to wait for a very, 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 very long time. Then on the hourly, we have the breakout. So what do we do after the breakout? We wait for the retest. You see price fails to continue down and will attempt to retest. You see the retest is already starting. We wait a little bit. Let's see. Yeah, potentially we have an entry here. Let's see. Yep, so that is why I tell you that the 15-minute is confusing, because you really have to know what you're doing. Here we can see the market is consolidating. It's creating some sort of structure. And we wait just for the momentum shift. Okay, we had one. Okay, so here I went a little bit too fast. But here we have another potential entry. How do we enter here? Well, possibly like this. You can see, well, 9 pip stop loss is okay. Yeah, potentially we can again target this. Let's see what happens. Yeah, the market continues to push down. Here we had another entry. You see price pushes down. If you were even more patient, this was a little bit too early. Price breaks this corrective pattern, comes back here to make a perfect retest of this trend line. Again, we have 1, 2, 3 on the 15-minute, but actually the entry is exactly the same. I can see, yep. And then the price continues. So you see, you can enter in numerous ways the market. The only thing that it will change, it is your stop loss. And so me as a day trader, I am developing an approach that will allow me to get those very tight stop losses. And you see my entry here wasn't at the top here, at the wick, here, right here, but it was actually in the middle of nowhere. But identifying structure and what the market did, I was able to capitalize on this, on the momentum that the price is already triggered. You see then price pushed again, and price will always pull back. I'm getting asked this question a lot. So when the market pushes up, can we sell? Well, yeah, you can sell, because the market cannot move like this in a straight linear fashion for forever. So yeah, this is a very recent example, guys. Maybe I can give you one more on the same pair. So what do we see here? Very clearly a nice uptrend. Price flushes massively to the downside. What are we waiting for? Well, we wait for a lower high. We draw our Fibonacci level. Price action gets to the 61.8%. And let me show you something right now. Okay, so we know that potentially the market is slowing down. We see the consolidation. If I switch to the hourly time frame, we will clearly see the market consolidating. So what do we wait for? Well, we wait for a rejection. Do you see rejection yet, guys? Because I don't. We have one. Price attempted to push down, failed. Attempted to push down, failed. And attempted to push down and failed. Is this bearish action? Well, no. So what I'm waiting for is some bearishness. Here is your bearishness. So if you draw right now a rectangle, if you can imagine what the market will look like on the lower time frames, just for a higher time frame, here you are. Boom. Breakout. First entry, you can do this. Let's say 20 pips stop loss. Second thing you can do is you can wait for that pullback potentially. Yep, so it happened here. You can see exactly I pushed again. So let's say we have another entry here. Then again, another pullback, 15-minute rejection, slow down, another one, boom. Here is another one. Actually, the entry is the same, but your stop loss will change here because you can use a 9 pip stop loss. Why? Because we see a new area formed here. And that is why I don't want to be sharing this lower time frame approach, because you have to have a deeper understanding of how the market moves, because right now you may go to the charts and you may confuse yourselves quite a lot. And you see the market again pulled back, push, it will pull back again sometime later in time. Here we can see it pulls back. Oh, that was a big pullback. Yeah, it doesn't matter. So that is how you enter the market, guys, on the lower time frames. You identify where the price action is on the higher time frame. You identify the intraday levels and what price action is doing. As a day trader, if you want to be a day trader, you have to identify the momentum, where the volume is, where the guys are going this day, and then it is just a matter of how you want to position your entry. I would advise you for now to focus on 1 hourly entries. And if you really want to dive deeper, I would suggest you to grab the course or just try to really understand what I'm speaking, because there is a lot of behind what I speak, but I don't really want to roll it out in order not to confuse you guys. So that is for today, guys. I really hope you liked this one. It was pretty quick, but I really hope it answered some of your questions, and I really tried to kind of convey that message that entries are not that important. Focus on your stop loss. Yeah, important point, stop loss should always be above structure. I have people sending me stop losses like this. So they entered after this bearish engulf, but they, for some reason, they put their stop loss like this. Well, if you enter on the 4 hourly, your stop loss should be like this. But if you enter on the 15 minute here, then your stop loss could be here again. So this is what you have to master, positioning your stop loss. Your stop loss is much more important than your entry. You can enter even here, but your stop loss should be above. That's ridiculous, but yeah, this is technically how it should be done. So that's for today's video, guys. Thank you for staying up until now. If you still have questions, make sure to mention them down in the comment, and I will be elaborating more on this if you need, of course. Thanks again, and see you on Thursday.